Welcome to another Tax Talker. Thanks for clicking. I really do appreciate it. Today we have rapid fire business changes from the One Big Beautiful Bill. If you missed my previous video, I have already done a breakdown rapid fire edition on the individual side, but this one's for you business owners on everything that changed and that will matter for 2025 and beyond. Let's get into it. Depreciation. Bonus depreciation is back at 100% effective for tax year 2025. It would have been 40% had they done nothing. Now it's back to 100% and it's permanent, or less until Congress wants to mess with it again. Section 179 expensing also got a big bump. Went from about 1.2 million to 3 million of assets, and then that phase out range doesn't start until you hit total assets placed in service of over 4 million. So a lot of leeway for Section 179 expenses. I'm gonna have a video coming out soon on when to take bonus depreciation, when to take Section 179, how do you think through those? Stay tuned for that. Research and development has been a huge pain point. If you've been affected, you will certainly know about it. Following the Tax Cuts and Jobs Act, there was this sunset built into it that in 2022 would start businesses having to capitalize their research and development expenses over 5 years. Research and development can include things like just wages to employees. So having to capitalize these, not being able to deduct them in full is a huge deal and created a lot of basically artificial income for 2022 through 2024. This has finally been fixed. Starting in 2025, businesses will be able to deduct their domestic research and development expenses. Foreign research and development still needs to be capitalized over a 15-year period. If you did have to capitalize research and development expenses, you have a few different options. Every business has the ability to deduct all still capitalized expenses in 2025 or split that deduction over 2025 and 2026. For small businesses, that is businesses under $31 million in average gross receipts, they also have the option to go back and amend 22 through 2024 to deduct these expenses. You would have to make an election. We don't have details on how to make that election yet. I think in practice, many small businesses still won't want to do this. Practically, given the delays we're seeing with getting IRS refunds, it's perfectly possible that you could file these amended returns when we get regulations in the fall. You could file them in fall of 25 and then go on to file your 2025 return in spring of 26 and get the refunds from that 2025 return earlier than your amended returns. So without a compelling reason, I think we're going to see a lot of taxpayers, even small businesses, just run this through 25. But the option is there to go back and amend. I think one very compelling reason would be if you didn't get all your R&D credits, you could go back and amend for that reason. All right, we have a few items that were rumored to change or did change in an earlier version of these bills, but did not actually change. Starting with QBI. It would have expired had they done nothing, but now it's been made permanent. It's a 20% deduction on business income. It still exists for specified service trader businesses. The only change is a little bit of wiggle room on the phase-out ranges affecting the SSTBs. Qualified opportunity zones, those are still back and there's gonna be a new round of them, but any rumors of being able to continue to kick the can on deferred capital gains, that's not happening. So if you've deferred a capital gain using a qualified opportunity fund, you are still gonna have to face the music and pay tax on that gain in 2026. Stay tuned though for 2027 and beyond. There will be a new round of capital gain deferral ability. Lastly, that small business exemption, there was talk of bumping that up or bumping it up for certain businesses like manufacturing. That did not happen. So in order to qualify for the small business exemption, you need to be under $30 million in average gross receipts over the last 3 years. That will continue to get inflation adjusted. And this is a powerful ability to be able to get out of accrual basis, tax reporting, unicap adjustments on your inventory and interest limitations on under 163J. One tweak that did happen, if you are over that limit and faced with interest limitations, you will note that depreciation is no longer part of the kicker there. So you will have an increased deduction. If you were subject to 163J, ask your accountant about how big of a change that is for you. It should only be to your advantage. 1099 reporting, we finally got a little clarity here. We've long had this threat of the 1099K being required for really low thresholds, like $600. In fact, that was the law, and then it just kept getting postponed on implementation by the IRS. Now that has been cleaned up. It goes back to the $20,000 and 200 transactions requiring a 1099K to be issued. 1099 miscellaneous and NEC, that will get bumped up in 2026. So 2025 still have that $600 threshold. Starting in 2026, we have a new $2,000 limit, and that gets tagged for inflation too. Next, we have a few obscure items, but if you're in this category, it could be a huge deal for you. For residential construction out there, big definition change for what qualifies as a residential construction project, and it'll include big multi-unit and apartment complexes. So definitely easing the compliance burden and tax ramifications there. The tip credit, who qualifies for it, has been expanded in connection with the no tax on tips that employees are going to get. That statute also included the ability for beauty services, hair and nails, body and spa, skin treatments. These are all going to qualify for the tip credit. But this is for employers who are reporting tips. They're going to get a credit back on the payroll taxes they're paying on those tips. Finally, we have some expanded qualification abilities for Section 1202 stock. That's qualified small business stock. This is for your startup companies that think they have huge upside or experiencing huge revenue growth. It has gotten more possible to qualify from a gross assets test, an issuer limitation, and holding period. Those have all gotten easier. So this is another area where it's going to be pretty obscure, but could be a huge deal for those that qualify. Okay, along those same lines, if you are considering buying or constructing a factory, you have the ability to write off the full amount of that, the full amount of the building. Typically, a building gets depreciated over 39 years. For qualified production property, aka a manufacturing facility, if you qualify under these regs, you're going to be able to write off the full amount using bonus depreciation in the first year. There's rules on when you got to have that thing in construction before 2029 and placed in service before 2031. It's definitely targeting new builds, but there's also circumstances where you'll be able to acquire property as long as it wasn't previously already manufacturing. They don't want factories just easily adding on or moving to a ready-made factory and getting a big write-off. So think a defunct shopping mall or defunct office building. You purchase that, it hasn't been manufacturing in more than 4 years, you're likely going to be able to write off both the building and all the improvements you do to get it operational. Advanced manufacturing tax credit. This was started by the Inflation Reduction Act and has just been expanded on what qualifies. So previously it was just chip manufacturers or the manufacturers of the equipment that makes chips. Now it's been expanded to other critical manufacturing, and we're just going to have to wait for Treasury regulations on what that could include. But if you fall within that, it could be a very substantial write-off, a tax credit, dollar for dollar reduction in your tax. That is the Tax Talker for today. Thank you for watching. Be sure to like, subscribe, leave a comment. Hey, I'd love to do a video on a viewer comment, and stay tuned for my next video where we'll be going over depreciation, Section 179 versus bonus in 2025. Thanks for watching, and we will see you next time.